Well, it's an IPO market morning, so to call it. So let's get straight to one of those IPOs that actually had a bit of a subdued listing. Fedbank Financial Services, or FedFina, has made a subdued debut on the exchanges, listing at a bit of a discount in comparison to its issue price. This after the IPO was subscribed a little over 2 times during this issue period. To discuss the company's post-listing strategy, we're joined by Mr. Anil Kothuri, the MD and the CEO at the Fedbank Financial Services. Hi, Mr. Anil. Good morning, and thanks so much for joining in, sir. Congratulations on the listing, though it's been a bit of a subdued one. I recall when you visited us here in the studio that you said that post getting these funds, there'll be an improvement in your capital adequacy ratio. So if you could tell us by how much does that improve? And also you hinted that NIMs as well could improve. So give us an outlook on both these two fronts.
Good morning, and thanks for having me over. Yes, the capital position of the company will get augmented by something like 27% or so. So therefore, we'll use more capital than debt over the next few quarters to fund our loan book. As a consequence, what will happen is that our NIMs will improve from here on. This is simply a consequence of replacing debt by equity, and they should trend upwards for the next 12 to 15 months.
Okay, so your CRAR will improve by how much, you said? 27% is the absolute improvement, or in a ratio percentage, what should it improve by? What was it? What does it improve to? And also NIMs, if you could give us a ballpark, a band that we should work with.
So our closing equity as of June was 1,415 crore rupees, okay, and you add September profit to that and 600 crores on equity, so it increases the equity base by about 27%. That's how you get the number. Now, we have an AUM of shy of 10,000 crores, so about 600 crores of that, you will replace debt with equity. So the improvement in NIMs as a consequence will be something like about 30 to 35 basis points.
All right, 30 to 35 basis points. The last reported NIMs were close to around 7.7%, so we can see them inch higher to about 8%, assuming that yields remain constant as well for you. Thanks a lot for joining in, Mr. Kothuri. I wanted to know a little about the growth itself. Now that you have equity in your books, your CRAR, your position increases. What's the rate at which you expect your loan book to grow at? And in that in particular, in gold and SME portfolio, that have been growing faster than your overall loan book. How do they grow in this year and the next 1 year? If you could give us a sense of your AUM growth and gold and SME portfolio growth.
Yeah, over the past 3 years, we've been growing our AUM at a compounded 37%. Okay, and that's because of the opportunity that exists in the SME segment. All our loans are to small self-employed customers or SMEs. So, that growth will continue. And, it's roughly the same kind of percentages that one can extrapolate here on. The growth in gold, there's also a tailwind in terms of the prices of gold, and we are seeing a bit of that over the past few days. So, if that continues, then the growth in gold could be a little higher.
Gold, which is close to 33% of your book, and SME, which is close to around 15-16% of your book. How much do they go to as a proportion of your book going forward?
So the proportions will not largely change from here on. Gold is about 30-ish% of the book, and the rest is loans to SMEs for working capital. Okay, and the proportions will largely stay within 1 percentage point here or there, depending on the prices of gold, which could give a tailwind to the gold loan AUM.
How much is the AUM itself likely to grow at, you said?
Overall, the AUM should grow at a compounded 35% over the next few years.
Okay, all right. In terms of an operational efficiency improvement, what are you looking at? I mean, what was it? And you must be having some targets going ahead, right? So if you could quantify that.
That's right. Our cost to income ratios are at the 57-58% mark. Okay, and through a combination of greater equity and greater operational efficiency, we seek to improve that by a few percentage points, every year. Okay, That's because we've invested heavily in branches over the past few years. We've opened almost 250 branches over the past 3 years. And as the branches build AUM, you will see that operational efficiency playing out over the next few years.
All right, so your operational improvement should be around 100 to 200 basis points every year consistently, basis your expansion plans going forward. Final question then, with regards to your asset quality, that so far hasn't been a problem. So, for you, what is the average asset quality that you're looking at going forward? Will your NPAs be maintained at current levels, or should we see further improvement as well?
The NPAs are a function of the overall operating environment that we are part of. Okay, the 2 years of COVID was stressful for the small self-employed customer. With the economy opening up and opportunities increasing, the portfolio quality has improved from there on. And I expect with the environment, expect it to be benign over the next couple of years. We should be able to consolidate the improvements in our portfolio quality.
All right, sir. Thanks so much for stopping by and filling us in with all those details. It's been a subdued listing, but otherwise, the path ahead looks, you're sounding quite optimistic out there, both on growth, improvement in NIMs, improvement on the cost-to-income ratio as well. So we wish you well, and we look forward to chatting up with you in the near future. Well, for the time being, I think we'll get